Okay. Welcome back. Welcome back, investors, to Ticker Time News. I'm Adam, and we are rolling on with another after hours live stream. We're going to talk about the stock market. We're going to talk about Tesla's live event coming up in Austin. We're also going to talk about crypto. Bitcoin has reached resistance that I talked about yesterday. So we're going to look at Bitcoin's chart and see what's happening. Also, we're going to take a look at the other cryptos to see how they're performing. And most importantly, remember, this live stream is not for me. This live stream is for you. So if you have a question, please make sure to leave the ticker symbol and your question about that company in the comments, and we will go over that company live during the broadcast. So make sure to do that, because I believe that's the most important thing that I can do to help my fellow investors on their journey. So make sure to leave a ticker symbol and your question in the comments, and we will get to those live on air. Just going to make sure I've got the chat pulled up here so I can see your questions as they come in. I want to thank you again very much for being here. Let me just load this chat box here to make sure I can see your questions as they come through, and then we're going to get right into it. The market was green today for the most part. Very glad to see that. A lot of stocks were performing well. Not a lot of big movers, but there were some nice movers for sure. And of course, Bitcoin has stalled at resistance, but that's okay. We talked about that resistance level yesterday, so we're going to look at that chart too, just to make sure that everyone knows where the resistance is for Bitcoin and how Bitcoin is going to continue, I believe, on a incredible bull run into the end of the year. So it's going to be a wild ride. So make sure you're ready for that with Bitcoin. Okay, so let's get into it. First off, let's talk about the market. So the market today was overall a green market. There were some red downs, there were some downers, some red stocks today, but that happens in the market. If you look at this chart right here in front of you with the red and green bars, this is showing you a basic overview, bird's eye view of what happened in the market today as far as what was up and what was down. And as you can see, most of the companies that were in the green, they were only up between 0 and 2%. And then the second highest bar, it's nearly a tie, but it is the green bar to the right of the taller green bar. And that's companies that were up 2 to 5% in the market. And then just slightly below that is the tallest red bar to the left. And that was companies that were down 0 to 2%. So the majority of companies were in the 0 to 2% on the plus side, and then 2 to 5% on the plus side. And then the third batch was 0 to 2% on the downside. So it's just very interesting to see this and watch this every day. One thing about this live stream, since I've been doing it for a few days now, I know we're brand new at doing the live stream, but doing this, it's not just helping all the viewers who are watching. It's also helping myself to become a more educated financial stock crypto investor. And I'm hoping that through these live streams and through the videos that I publish throughout the week, that we all are constantly learning about the market and the best ways to invest, how to read charts, etc. So very interesting. So if we look at the big indices today, the Dow Jones was up almost 1%, 0.98%. S&P 500 is 0.83%. The NASDAQ up 1.05%. The Russell 2000 was the biggest winner, up 1.59%, and the VIX continued its downtrend like it did yesterday, a 6.95%. So if we're going to talk about the market and what I saw in the markets today, definitely stocks extended their gains. We already saw that the major stock indexes, including the Russell 2000, added more than or just about 1%, and that was really good. And I think a lot of that came on the news when the Senate Majority Leader, Chuck Schumer, announced that lawmakers have reached an agreement to extend the debt ceiling through, I believe it's early December. The agreement will lift the debt ceiling about $480 billion from where it is right now, and will give the Treasury, I believe it was to about December 3rd with funding. So we're going to have to do this all over again in just over a month's time from now. But I don't know. It's just the government kicking the can down the road with this. I really wish they would have handled it now. Because if you think about FUD, fear, uncertainty, and doubt, that's what drives the markets down. So with the government kicking the can down the road, yeah, the stock market turned green and stayed green today, and was green yesterday for the most part, greener today. But, are they really solving any problems by just kicking the can down the road? I'm not sure about that. I would rather them solve it and solve it now and not kick the can down the road and wait to solve the problem some other time. You let me know what you think about that. Should Congress have fixed it now, or was kicking the can down the road okay? Let me know what you think in the comments. Also, I just lost my train of thought there for a second. Going live can be odd. I'm definitely getting used to it, but it's different to have all your thoughts at one time and trying to get out what you want to say and make sure that it's clear and understandable. But also today, energy prices fell. They fell yesterday a little bit from their 7-year high, but they fell a little bit further today, and that also was causing a bit of easing of concerns over the global energy crisis. I believe traders now await the highly anticipated payrolls report, which is due out tomorrow, for an update on the labor market recovery, as strong job numbers would raise the odds of possibly an early Fed tapering and interest rate hike. I don't know how much earlier they would do it in 2022, but I guess they could. Meanwhile, though, this showed a bigger than expected about the jobs report that's coming out. There was a bigger than expected claims last week, so we'll see how it ends up being tomorrow. If the jobs report is good tomorrow, then the stock market will probably continue up. Remember that it was a couple days ago when I talked about the S&P 500 win rate, and there was a 71% chance that the market would be green by the end of this week. The market would have been up for this week. So far, we're falling into that 71% win rate, with the markets being green this week more than being red. So I find that interesting that we called it, I believe it was on Tuesday when we talked about the S&P 500 win rate. And yeah, we're following in that 71% right now. So tomorrow, if the job numbers are at least on par with expectations, then it should be okay. The best performing sectors today were the consumer discretionaries, energy, and basic material sectors. The stock market rally has run parallel to a jump in interest rates, which implies there is a better mindset at the moment about growth prospects. What do you think about that? Let me know in the comments if you think there's a correlation there or not. It's just something that I noticed in the market. Okay, let's talk about some of these stocks that did well today, what didn't do well today, and see if we can find any patterns or anything that can help us as investors. So right off the top here, we see Faraday Futures was up 9.8%. Let's see, Alibaba, 8.2%. Chinese stocks with Alibaba here. Do you think right now, with our geopolitical posturing that's going on between China and the US and the rest of the world, and China cracking down on companies like Alibaba, do you think now is a good time to invest in Chinese related stocks, or do you think they're too risky right now? Let me know in the comments what you think about that. Let's see, we got Sunrun, a solar company. They were up 7.6%. Arrival was up 7.4%. That's a electric vehicle company. They make buses and bigger material. Bed Bath & Beyond up 7.4%. Xpeng was up 7%. GoGo was up 7%. They've been on a little run the past couple days. NIO, electric vehicle maker, up 6.9%. Children's Place was up. Sunnova was up today. Array Technologies. So there's 3 solar companies that were in the green today. 6.5% up to 7.6%. So glad to see they were doing good, because when we had our downturn at the beginning of the week, solar companies took a pretty big hit. So it's good to see that they're coming back today and a little bit yesterday. Plug Power, they were up 6%. They're up to $26.09 right now. Zillow was up 6% today. They're back into the $93 range. Let's see. Ford Motor Company was up 5.4%. They're at $14.89. Speaking of Ford Motor Company, what do you think about what General Motors is saying? At their investor event that they held earlier this week, they said they're going to double their revenue in just a few short years. And a lot of that is going to be from electric vehicle sales. They're also pushing their Cruise, which is their like Tesla, but not like Tesla, similar to Tesla, where it's got autonomy, and they're looking at robo-taxis for that system and thinking that could make billions of dollars in just a couple of years. We got Li Auto up here at 5%, $28. Let's see, what else do we have? Penn National Gaming took a big hit earlier this week. They're up 4.8% to $75 now. Fuel Cell Energy is up 4.7 today. Peloton, they were up 4.7. They're in the $87 range right now. And talking about GM just a minute ago, they were up 4.6% today to $56.44. And, you know, like I said, during their investor presentation, they want to be seen more like a technology / Tesla type of company going forward. They don't want to be seen as a big automaker producing internal combustion engines. That's what they looked like in the past. They painted a different picture for what they want to be seen as going forward in the future. Poor old Nikola, they were up 4.5% today. They're at $10.67. Surprisingly, they're doing better than Workhorse is right now, and Workhorse had real vehicles. Electric Last Mile Solution, another EV play, was up 4.4%. Let's see, Unity Software was up 4.3%. They're a big player in the up-and-coming metaverse. Let's see what else we have. Square was up 4.2% to $249. ChargePoint they were also up today, 4.1%. They're at 1866. Arcimoto, another little fun electric vehicle, they were up 4%. They're at $10.68. Skills was up 3.8% today. They're at $8.85 right now. I saw recently that ARK Invest, they dumped nearly 1 million shares of Skills. So I'm wondering if they think that Skills may be pausing a bit here, and maybe their future growth is going to take a little longer than maybe what they first expected. I'm not sure, but we'll have to see how that plays out. Let's see here. What else do we have? SunPower, another solar company. They were up 3.6% to 24.72. Shopify, they were up 3.6%. Let's see. What other good ones do we have here? Snowflake, 3.3%. They're up to $320. At the beginning of the week, they were at about $307. So they've had a really nice week so far. Pulling up Etsy, they were up 3.3%. They're at $216 now. Let's see. Trade Desk, they were up 3.1%. They're at $70 right now. Vision Marine Technologies, we've seen them on here every day so far. They up another 3% today. That's the Tesla of the boating industry. They create electric boats. Pretty cool. Pretty cool indeed. Redfin was up 3%. They're back to the $49.53 range. They dipped below $49, and it puts it into an interesting position as an investor to take little nibbles on Redfin if you believe in their growth story. Beyond Meat, they were up 3%. They're at $104 now. Corsair Gaming, they were up 3%. They're at $26 range. Let's see, what else do we have here? Brunswick, that's a manufacturer of boats. They were up 2.98%. They're to $99.80. They were at over $100 earlier this year, and they've been kind of trading sideways throughout the summer months. We'll see if they can't come back during the fall and maybe pick up some more shares there. MicroStrategy was up 2.8. Okay. So there's a lot of different companies that were up today. Obviously, since the majority of the market was up, that makes it pretty easy to find those. Open Door Technologies, they were up 2.5% today. All right, let's see what the losers were today and what we might be able to get out of that. Now, remember, when we looked at that overview chart, there weren't a lot of companies down really big. And when we start off here at the losers, the biggest number, it was down 6.95%, and that's the VIX. So the rest of them that we have here, next is Hive, that's only down 3.9%. And then we have the few that are in the 2% range, and then the majority of these are going to be in the 1% range. So let's see what we have here. 23andMe, they were down 3.1. Bitfarm was down 2.9. Hut 8 Mining. So Bitcoin stalled at resistance. So we can see here that the crypto related type of companies, they were also taking a hit today. They're down in the 2.8 to 2.9 range. Let's see here. Let me read this comment real quick. What do you think about Ride? It seems like there was only 10% of the agreement details announced. It seems to me that Lordstown would be in a very strong negotiating position to negotiate a deal. And then secondly, any updates on Workhorse? All right. Yes. So let's just go ahead and talk about Lordstown Motors and Workhorse. Let's go over to Trading View, where I do all of my charting. I had Bitcoin pulled up. Let's pull up Ride first, Lordstown Motors. And we know that the stock's been taking a beating. It had a lift off here when the news came out, but then it quickly sold down. Here's what I think about Lordstown Motors. I did a video a few days ago about it. The deal with selling to Foxconn, selling their factory to Foxconn, was hard. That must have been really hard for Lordstown to come to the realization that they needed to make a drastic move by selling one of their greatest assets, the factory, in order to stay alive as a company. Now, Lordstown has a great truck, I think. Right now, whenever any type of good news comes out, you immediately have negative reports come out about Lordstown as well, almost as if these reports are just ready to be triggered as soon as good news comes out. So I think Lordstown Motors has a great truck. It's a full-size truck. And when you compare it to Rivian, Rivian is a smaller pickup truck. It's not a full-size pickup truck. It's like a Ford Ranger type of a size of truck. Whereas the Endurance is a full-size truck like the Ford F-150. I think Lordstown has a good product. Lordstown has also created a prototype electric vehicle, full size, like the Endurance, but it's for the military instead. Think maybe Hummer replacement type of military prototype vehicle. I saw a video earlier this week about it, and I had heard about it earlier, but I hadn't seen pictures or videos until earlier this week. So maybe they can get in with the military too. Now, another thing with the Foxconn deal is Foxconn is investing in Lordstown Motors by purchasing $50 million worth of common share. So those two items, the factory and then the investment, that should give Lordstown Motor capital to continue for a little longer. Now, depending on the details of the deal, Lordstown Motors, think about this for a moment. Foxconn is the biggest iPhone manufacturer in the world. There's rumors of an Apple electric vehicle. Could there be a connection there with Foxconn now owning an electric vehicle manufacturing facility, manufacturing the Lordstown Endurance pickup truck? They're also going to manufacture one of Fisker's electric vehicles. Maybe an Apple car could be slipped in through that factory as well to be built, manufactured, and produced. Could there be a connection with Lordstown Motors, Foxconn, and Apple? It's a big stretch, I know, but it's just something to think about. Why would Foxconn jump into the electric vehicle arena by buying that factory? There must be a bigger plan at play that we don't know about. So, as a shareholder for Lordstown Motors, it's difficult. The stock's down to $5. It's a $5 stock. And if I just look at the history here, yes, it had a major run, but you know, it's down way below that $9 and $10 initial price for the stock. So is there a floor for Lordstown? And this is the daily chart, and if we look at the bottom here, we're at $4.74. Could that be the floor for Lordstown Motors? I don't know, honestly. It could be. Right now, the relative strength index for Lordstown Motors is under 30, which means it has been oversold. And you can see there was had a red day yesterday. Not much, but a little bit. So maybe there's a bottom here around the $4.75 to $5 range. Maybe that's the floor, and maybe it can be held there until Lordstown can publicly announce and show, very similar to what Lucid Motors has just done with their production preview week, allow the media, allow special guests, customers to come in and actually drive the vehicle. Getting the vehicles built and delivered into customers' hands, that's the best thing that Lordstown Motors and Workhorse can do right now. That's the best thing that they can do right now. Because until either one of those companies can get the vehicles into customers' hands at more of a mass production, the better. And that seems like an obvious answer. Well, duh, yes, of course. But it's really the most simplest thing that they can do, and it would be the most beneficial thing that they can do. Now, with Workhorse, I talked about them earlier this week, and I'm just going to kind of repeat myself here. But Workhorse, they need to put their head down and they need to work. That's all they can do. And I talked about, is there a floor for Workhorse? And I'm not sure if $6 is the floor for them, or if it's going to go lower to $1. I honestly do not know. The market sometimes, it can be irrational because a lot of emotion is being driven when you look at stocks. But as far as the company, ask yourself, has anything changed fundamentally with the company? Has the company suffered a big loss of some kind? The answer to that question is no and no. There's a new CEO. There's a new leadership team. So Workhorse was on a path. They were really banking on the USPS contract, didn't get it, sued. Then the new CEO comes in, takes a look at everything. The new leadership team, they look at everything. They come up with a strategy. They withdraw their case against the USPS. And now they're going to put their heads down. They're going to focus on building the best electric last mile delivery truck and drone they can build. And then they're going to sell them. They're going to deliver them. And they're going to just continue with that cycle, producing more vehicles. That's the best thing that Workhorse can do right now. And that's the path that I believe the new CEO and management team, they're doing. They have taken Workhorse and they've put them on a different path. Let's see here. Considering that although the Lordstown plant went cheap, Foxconn would probably end up building vehicles cheap, and Lordstown might get a piece of the contract manufacturing profits. There has to be some sort of an arrangement that we're not sure about with the Lordstown Motors and Foxconn, because Lordstown is still going to be manufacturing their trucks in the exact same plant. So what type of profit sharing agreement have they come up with? I haven't seen any reports or leaks or anything of that nature that talks about that part of the deal. We don't know the specifics on how it's going to be handled. So you make a great point there. I believe that same thing too. We don't know the full details that they could be sharing. I'm just trying to think here and gather my thoughts. When it comes to this Foxconn deal, I mean, I can see so many different directions that they could go. And, remember, one of the biggest things that drives the stock market is emotion, fear, uncertainty, and doubt. And right now, a lot of people are uncertain about where is Lordstown going. I pondered the question, is Lordstown pivoting to maybe do something else within the electric vehicle space? Maybe they provide Foxconn with the electric motor for the vehicles. Maybe they provide the skateboard part, and then Foxconn can come in and put a body over top of Lordstown's skateboard. It's possible. That's where I was thinking about the electric car rumors from Apple, and could there be a connection there? It's just, we're unsure right now as investors, and it's we can really imagine anything at this point that they could do, but we just don't have a concrete answer yet. Hopefully one will emerge soon. But yeah, thank you for talking to me about Lordstown here. I like the company. I love the endurance truck. I think it's a great truck. This deal, though, with Foxconn, it does allow your mind to wander a little bit and think about what are the different possibilities that could come from this partnership. And with Fisker also coming in to have one of their cars manufactured, who's in charge of manufacturing at the plant? Is it Foxconn? Is it Lordstown? I don't think it's going to be Fisker, even though their vehicle is going to be built there. So it's just something to think about that we don't have all the pieces to. That's the problem. We don't have all the pieces. And then back to Workhorse for a moment. It's just really the simplest solution is to build, sell, deliver. Build, sell, deliver. That's the best thing that Workhorse can do. It's the best thing that Lordstown can do. Did I help answer your question at all? Do you have another question? Something else? Anything? Any other companies that you might want to chat about? Excuse me, or look at? Just let me know. I'll watch the chat there. But I'm gonna head back to no news about why the lawsuit was dropped. Which lawsuit? Are you talking about the Workhorse lawsuit? Yep. Okay. The reason Workhorse dropped their lawsuit, I have a video talking all about why they did it, but the CEO said that they withdrew voluntarily. They withdrew the contract because they thought that it would be better to work with the government through cooperation, not litigation. So Workhorse, on purpose, they pulled the lawsuit. They dismissed the lawsuit. The judge accepted it. And now Workhorse is focusing on building partnerships, building relationships. There's other money in the government specifically for electric vehicles within different agencies. So Workhorse is thinking that maybe they can get some of that money. Workhorse is also trying to partner up and build their vehicle and build many of them and get them sold and delivered. But the reason they dropped the lawsuit is as simple as the new CEO came in, looked at the lawsuit, looked at the history, and said, this is not the best way to spend our resources. We need to take the resources from the lawsuit because it's a shot in the dark whether we're going to win it or not. Let's put the resources into a different direction let's cooperate with the government and not litigate with the government. It's really as simple as that, and that's why the lawsuit was dropped. There's nothing else to say about it. That's it. That's why they did it. You're welcome. Thank you very much for the question. Questions in the conversation. I greatly appreciate that from you as well. If there's anything else you want to chat about, just leave a comment and we'll dive into it. Let me just hop back over here to stocks that were down today. Oh, yeah. Okay. I wanted to look at Bitcoin. That is something I wanted to look at. So earlier, we talked about earlier this week, we talked about resistance for Bitcoin. And on Monday, I said on this black trend line right here. So we're looking at this green candle. 1, 2, 3 down. If Bitcoin could close above this trend line right here, then it had a chance to shoot up, and it did. It closed it and opened up right here. It broke this trend line right here and was able to shoot up. Now, what are the other resistance lines for Bitcoin? Well, if you see these blue horizontal lines here, these are price resistance for Bitcoin. And Bitcoin ran right up and touched this second one from the trend line right here. That's right around $55,600. And it got rejected off of this trend line. But that's okay, because like I said earlier in the week, when Bitcoin broke out right here, it ran up 1, 2, 3 candles, and then it had a red candle, and then it moved sideways, and then it had 1, 2, 3 candles. Now there's a red candle again. I anticipated this, and I said that this would happen. Now, I expect that Bitcoin will consolidate right here, maybe for a day or two, maybe not. But the next price resistance is at 58,000. And then there's a big resistance for Bitcoin. And it's sitting right here where this trend line resistance is and the price line resistance is. So there's 2 resistance channels right here that Bitcoin's going to run into, and it's right at $59,000 to $60,000. And if it can break that, then the next place that it can go is much higher. I mean, we're talking. I've got to bring this down some to reach it. The next place in the Bitcoin is going is to 75,000. So it sounds like big numbers, but this is the end leg, the final leg of Bitcoin's bull run. And if we just measure from this 75, let's see, where is that? Right there. 75 to where it is right now. I mean, we're talking about 26, 27% that it has to run to get there. I think it can, and I think it can get there by the end of the year. So that's Bitcoin. It's what I want to share with you, those resistance lines. I wouldn't worry about this resistance here. We called it earlier this week. And remember, we've got another one here at about 58,000. And then we have a big one at 59,000 to 60,000. Okay, so that's Bitcoin. Let's hop over to CoinMarketCap real quick and just see that Bitcoin, its market cap is over $1 trillion right now. That happened earlier this week, that it popped over that $1 trillion mark again. So it's strong, it's healthy. It's up 23% in last week. Ethereum is up nearly 20% in the last week. It's at a $424 billion market cap there. Then we got Bitcoin Cash, Cardano, of course, and Tether. XRP. Dogecoin is in the top 10. Okay. Now, I saw this story earlier from Bloomberg about, is it Shiba Inu or Shiba Inu? Is now the 12th biggest crypto after a 367% rise. And this was published yesterday, October 6th. But when we look at coin market cap, these are live numbers, and we go down to the 12th position. That's Uniswap right now, and it's down to the 20th place. So it must have taken a pretty big dip. Yeah, it's only up 247% as of right now. So it had a sell-off since this article yesterday at 367%. So I just wanted to compare notes on that too. That's another, I don't know if I would invest in it, but it's neat to watch for sure. Okay, there's one other thing I wanted to talk about before Tesla. But Tesla does have a live event starting in 21 minutes, and it's going to be held at their factory in Austin, Texas. The factory that has not been put online yet to deliver vehicles. So I'm very curious to see what they have to say here in another 20 minutes. But before Tesla goes live, there's this interesting proposal in Washington, in Congress, that the IRS would track all bank transactions over $600. So if you have $600 in your bank account, then the IRS is going to have permission, if the legislation does pass. I don't know if it will, but it's something that we should all know about. If the bill passes, the government then, if you have $600 or more in your bank account, the government can basically watch what you're doing. How much money is coming in, how much money is going out. So a lot of Americans, millions of Americans, have a side hustle. It's very common. You know, think of Uber drivers who have a day job or a night job, and then they drive for Uber for a few hours every day to pick up a couple extra bucks. Think about waiters and waitresses at restaurants when they get a tip, when they get a cash tip from a customer. A lot of times, these types of revenues for an individual, well, they're not reported on tax returns. I don't know of any waitress or waitresses or waiters that report their cash tips. But if the government is allowed to do this, then the government is going to say, oh, hey, Jill, you or John, you have got $1,000 extra this year in your bank account than normal. Where'd that money come from? Oh, those were my cash tips from, helping my neighbor across the street cut up a tree that had fallen down. Oh, that was a tip that, I got from, serving at a restaurant. And the government's going to want to tax you on that side hustle to make sure they get every penny they can. This is an overreach of government. The government should not be allowed to stick their hand in your bank account and watch what you're doing. And reading the report, it's, oh, we're going to tax the rich. Okay, that's fine. Tax the rich. Everybody should pay their fair share. We live in a country. We don't live in individual little kingdoms or what have you, and we have to cooperate. So we all pay our fair share. That's okay. But for everyone who's got a side hustle, and you're getting, maybe an extra $100 a week because of your side hustle, so what? That's your business. The government saying $600. If you have $600 in your bank account, then we're going to watch what you do is not right. And that $600 is not taxing the rich. I don't think somebody who has a lot of money, who may be financially rich, I don't think they only have $600 in their account. I think it may be more like $10,000, $50,000. I mean, think of the average American and how much they have in savings. Think about how much you have in your savings account, if you had one. I know when I was a early 20-something, I wasn't saving a lot of money, and I had a side hustle. I had a business I had started, and I had a side hustle on top of that. This is not right. Everyone needs to be involved. Contact your representative, your senator. This is not right. The IRS should not be allowed to track our bank accounts for such a small amount like this. $600 is not the rich. $600 is the average American. I know I don't typically talk like this in any of my videos, but this is really hitting a nerve with me. I don't think it's right. Just here just a little bit. Here's a little bit of what Yahoo News is reporting about it. A major component of President Joe Biden's plan will raise revenue to pay for his trillions of dollars in new federal spending is now under fire from trade associations across the country, and they should be. The Biden administration has made clear its plan to beef up IRS auditing by expanding the agency's funding and power. Biden's latest proposal would require banks to turn over to the IRS, the Internal Revenue Services, bank account information for all account holders or all accounts holding more than $600. I'm sorry, that is not the rich. That is not the wealthy. It should not be $600. If you want to do this, raise it to $100,000. This is not the rich. The average American lives paycheck to paycheck. Again, I'm sorry for talking this way on the channel, but this is not right, and this is an overreach by the government. They continue to say, in a sharp pushback against the proposal, more than 40 trade associations some of which represent entire industries or economic sectors, signed a letter to U.S. House Speaker Nancy Pelosi and Minority Leader Kevin McCarthy, raising the alarm about the plan. The letter, which includes the support of several banking coalitions, calls on Congress to reject that requirement, saying it violates customer privacy and would create an incredibly expensive and elaborate reporting requirement for banks. While the stated goal of this vast data collection is to uncover tax dodging by the wealthy, this proposal is not remotely targeted to that purpose or that population, the letter said. I 100% agree. In addition to the significant privacy concerns, it would create tremendous liability for all affected parties by requiring the collection of financial information for nearly every American without proper explanation of how the IRS will store, protect, and use this enormous trove of personal financial information. And that's why I am talking about this on this channel. Personal financial information. We talk about personal finance. We talk about investing in stocks, crypto, real estate. That's what we talk about on this channel. And we talk about helping retail investors. This is not right. Okay, they continue on in here. Let's see, where did I lost my place here. Norris Trope. Okay. We believe that this program is costly for all parties, not fit for purpose, and loaded with potential for unintended and serious negative consequences. The groups argue it would target almost every American and question whether the IRS could keep that information secure from hackers and bad actors. The undersigned associations, representing a cross-section of financial and business interests, right to express our strong opposition to a proposal under consideration as part of the reconciliation package that would establish an expensive new tax information reporting regime that would directly impact almost every American and small business with an account at a financial institution, the letter said. This proposal would create significant operational and reputational challenges for financial institutions, increase tax preparation costs for individuals and small businesses, and create serious financial privacy concerns. We urge members to oppose any efforts to advance this ill-advised new reporting regime. Some reports indicate that Democrats hope to raise the $600 threshold, but that has yet to materialize. Biden proposed giving an extra $80 billion to the IRS earlier this year for auditing, saying the agency would more than make back those funds. House Democrats have so far indicated they plan to fulfill that request. There's a 99% compliance rate on wages because wage earners get their earnings reported to the IRS. A fact sheet says that was handed out by the White House to lawmakers to sell them on the plan. But the super wealthy who get their income from unreported sources are able to hide their income and avoid paying the tax they owe. In fact, each year, the top 1% chooses not to pay more than $160 billion in taxes. That's fine. Great. Whatever. Then go after those people. target those people. Do not target every American. I hope you're paying attention, and I hope you're aware of what's happening, because this is wrong. Okay, I ranted a bit. My apologies, but this is serious, and we've got to pay attention to what's happening in our country, in our financial systems. We're investors. When we trade stocks, sometimes we make a profit, sometimes we make a loss. That's part of the game. And we report the profits we make, we report the losses we occurred, we pay our share of taxes. That's what your job is as a citizen. But this cannot be allowed. This cannot happen. We cannot allow this to happen. So make sure to contact your representatives, your senators, and say, no, you cannot do this. This is an overreach. This violates my constitutional right to privacy. It can't be done. Could you imagine the harm? Let's not think about all the Americans that live paycheck to paycheck and have side hustles just to put food on the table. Think about the negative consequences this could have. They brought up, what if the IRS cannot protect the data sufficiently enough, and bad actors hack in, get the data. Oh my goodness, you know what? You wake up the next morning and you look at your bank account because you thought you were getting your paycheck this week, and your bank account says zero, because someone took out all of your money. What if, just bear with me for one more moment, what if the government does this? You have your side hustle, and instead of the government sending you a letter saying, hey, you had an extra $1,000 in your account this month that we could not possibly, you could not possibly have earned from your normal job, where this money come from, and they just take the money right out of your bank account without your approval, without your permission. I know they do this anyways for people who have tax liabilities that need to be paid, but for the average American who had $1,000 side hustle that they made over 365 days, that is not right. So I just want to make sure that everyone is aware of this. We're paying attention. We're listening, we're learning, because as investors, that's one of the things that we do every single day. We learn something new. We learn about a new company to invest in. So make sure you're paying attention to what the government is doing also with the financial systems. That's just what I wanted to say today. I know I don't normally talk this way, but if you like it, I can talk more about these types of topics. Just make sure to click that like button. That lets me know that you like what I said. Is it possible the intent of regulatory changes is intended to catch money launderers, i.e. those who acquired money illegally, and trying to bring it into our system, reducing the value of our dollar? Yes, it is possible. But the federal government already has ways to go after and catch people who are cheating the system. Sure, it's not perfect, but by allowing the government to go in to those with $600 in their account, that's not the people who are laundering money. That's not the people who are doing something illegal. I wouldn't think those with $600 in their account, those are the Americans who are living paycheck to paycheck, and they're wondering if they're going to have enough money to put food on the table next week because of, say, inflation. We go to the grocery store, the cost of everything at the grocery store is up like 30%. That's a 30% tax that we just had in place on us because of inflation. So I'm just putting the idea out there Like investing, we all have to make our own choices, our own decisions, but we have to be able to listen to others also. I understand that, yes, this would allow the government more opportunities to catch those who are doing something illegal, but $600, isn't that a bit too low? Isn't that reaching too many Americans? That's what I think. I think it's too many hardworking, everyday Americans living paycheck to paycheck. If you want to go after the real criminals, raise it up to like $50,000, $20,000, but not $600. That's just my thought. Okay, I'm gonna move on from this topic. I'm just gonna check in here with Tesla, because it should be starting any minute now. So what do you think Tesla is going to talk about in their annual stockholder meeting? I'm really interested to see what the factory is going to look like, where they're presenting. I wonder if they're going to, be inside or outside. All right. Well, I'm going to let this play here. I'm going to keep the chat up and monitoring that. I'm going to take a quick little break here. I mean, it should be starting any moment. Any moment. Okay, it is live right now. Just close some of these other tabs. Hopefully the sound of this will come through as well. And I'll hide myself too once it's out, but I'll keep the chat open so we can talk in the chat as well while this is going on. So I'm going to go ahead and cut out of here, but I'm gonna leave this feed up so we can watch what's going on with Tesla. So that way I'm not blocking the. All right, so I'm gonna hide my face now.
Good afternoon, everyone, and welcome to Tesla's 2021 annual meeting of stockholders. We're glad you could join us today. My name is Martin Viecha, and I'm Tesla's Senior Director of Investor Relations. There will be two parts of today's meeting. First, the formal part of the meeting will cover the 9 items that stockholders have been asked to vote on. After the voting, I will introduce Tesla's co-founder and CEO, Elon Musk, who will give a presentation about Tesla's year in review. At this time, I'd like to thank the members of the Tesla team and board who are here with us today. A representative from PricewaterhouseCoopers, Tesla's independent auditor, is present on the phone with us as well. But before we begin, I'd like to introduce you to Robin Denholm, the chair of Tesla's board, who would like to say a few words.
Thanks, Martin. Well, welcome to the 2021 annual shareholders meeting here in virtual form this year. We hope next year that we'll be able to have our regular in-person gathering, just like we have over the last decade. Since we last met as a shareholder group in September of 2020, a lot has happened at Tesla. I want to just recap some of the things that have happened over this last 12 months. So in the 12 months that ended September of 2021, we've delivered over 800,000 vehicles. We've also started new production lines in Shanghai. We've commenced the pilot production of our own in-house battery cells. And on top of that, we've constructed 2 new gigafactories on 2 different continents, including the one that we're here today in Texas. But maybe most importantly, our mission of accelerating the world's transition to sustainable energy remains at the center of what we do. Over the last 12 months, Tesla has continued to help shift the public perception of electric vehicles, and it wasn't too long ago that many people were still questioning the future of EVs. I would say that today that's no longer the case. There is no doubt that the transition to sustainable transportation and the transportation industry is turning electric. In many places around the world, you can't drive down the street without seeing many Teslas, which to me is an incredibly proud thing and a testament to our progress. While our performance to date has surpassed many common expectations, we believe that we're only at the beginning of what the long journey ahead that we have. As we disclosed in our impact report this year, by 2030, we are aiming to sell 20 million electric vehicles per year and deploy 1,500 gigawatt hours of energy storage per year. Our mission is clear. The automotive sector and the energy sector have to become fully electric. There's no question about it. While producing and selling 500,000 cars in the last calendar year is more than most expected, we need to continue to grow exponentially to create a true impact for the planet and for our shareholders. I also want to acknowledge that Tesla's achievements so far and our future aspirations would simply not be possible without the unrelenting efforts of our amazing employees. Each and every one of them, who globally now number almost 100,000, are doing everything that they can every day in the name of our mission. While our investors might recognize a handful of Tesla executives or directors, we know that Tesla's success is due to the creativity, the ingenuity, and the sheer hard work of our tens of thousands of employees globally. As we expand into a truly global manufacturer, we are committed to making sure that we employ, grow, and retain people with a passion for what we do and are aligned with our mission and our values and culture globally. I also want to acknowledge and thank my fellow Tesla board members who have been unwavering in their commitment to Tesla to help grow, guide, and evolve the company and its governance practices. And I especially want to call out and thank Antonio Gracias, as this will be his last shareholder meeting as a board member after 14 years of unrelenting support and being on the board. He's made a significant part of Tesla's journey and a key member of the board for all of those years. Antonio, we appreciate everything that you've done for the company, and we will miss you. And lastly, I wanted to say thank you to you, all of our shareholders. You are an intrinsic part of our journey and this unique journey. We're proud to say that our shareholder base is probably the most committed, most active, and most engaged base I've ever seen. Thank you for spreading the word for us, for being with us through our ups and downs, and we wouldn't be here or where we are today without your support, and we are focused on continuing to deliver to our mission and for you for many years to come. And so now I will hand it over back to Martin, who's the chair of our meeting today. Thank you.
Thank you, Robin. I will now call meeting to order. Please refer to the meeting agenda that is posted on our virtual meeting site. The time is now 4:36 p.m. Central Time, and I declare that the polls are now open. We have already received over the past few weeks voting proxies from our stockholders, meaning that almost all of the votes that will be counted were already submitted before this meeting. However, if you wish to vote your shares or change your prior vote, you may do so through the virtual meeting site. Tesla's board of directors has appointed Computershare Trust Company to serve as an inspector of election for this meeting. Computershare has taken a signed an oath as an inspector of election and has certified that starting on August 26, 2021, the proxy materials or a notice of internet availability of the proxy materials were mailed or provided to all Tesla stockholders of record as of August 9th, 2021. We have a majority of all the outstanding shares represented at the meeting, so I declare that there is a quorum present and that we may proceed with the meeting. The items on the agenda are as follows. Number 1, the election of 2 Class II directors, James Murdoch and Kimball Musk, to serve for a term of 2 years. Number 2, to adopt amendments of our Certificate of Incorporation to reduce director terms to 2 years. Number 3, to adopt amendments to our Certificate of Incorporation and bylaws to eliminate applicable supermajority voting requirements. And number 4, to ratify the appointment of PricewaterhouseCoopers LLP as Tesla's independent registered public accounting firm for the fiscal year 2021. Tesla's board has recommended that our stockholders vote for each of the director nominees and for proposals 2 and 4. We have also received 5 stockholder proposals as described in our proxy statement. I would like to remind our stockholders that Tesla's board has prepared a statement in opposition to each of these proposals, which appeared in our proxy statement. The first stockholder proposal is an advisory vote regarding reduction of director terms to 1 year. Our board has recommended that our stockholders vote against this stockholder proposal. The stockholder proposal is proposed by James McRitchie, who is on the line to present this proposal. Mr. McRitchie, I would like to invite you to speak. You will have 3 minutes.
Thank you. Can you hear me? I'm sorry.
Yes, we can hear you.
Okay, thank you. Almost 90% T500, Fortune 500 companies, their board and are widely viewed corporate governance best. The annual election of each directors more accountable contribute to improve performance, company value. Here's what a 1 point said when they their votes in advance. Shareholders should be able to participate in frequent elections of all board members, preferably on an annual basis. This proposal should also be evaluated in the context of Tesla's overall corporate governance. Shareholders cannot hold special meetings, act by written consent, nominate directors through proxy access. At our 2020 annual meeting, 56% of shares voted in favor of my advisory proposal eliminating supermajority requirements. The board is now letting you vote to repeal those supermajority requirements through proposal number 4. However, notice the board takes no position on this measure. That probably means Elon Musk and his inner circle are voting against it. Without this measure obtaining a 67% approval rating, neither the board's proposal to move to 2-year terms or mine to move to 1-year terms will pass. This is essentially a way for the board to look like they want to increase the frequency of elections without actually doing it. Our company's technology is second to none. Our company's corporate governance should meet the same high standards. Vote for proposal number 5. Thank you.
Thank you, Mr. McRitchie. The second stockholder proposal is an advisory vote regarding additional reporting on diversity and inclusion efforts. Our board has recommended that our stockholders vote against this stockholder proposal. The stockholder proposal by Calvert Research and Management, whose representative Kimberly Stokes is on the line to present the proposal. Ms. Stokes, I would like to invite you to speak. You will have 3 minutes.
Thank you. Tesla states in its 2020 Diversity, Equity, and Inclusion report that it is on a mission to accelerate the world's transition to sustainable energy. We at Calvert Research and Management heartily support this effort and understand how important it is to invest in companies that are leading the charge to a net zero economy. However, we also know that it takes human resources to achieve these goals and ask Tesla to demonstrate how the company's human capital management strategy, and specifically its diversity, equity, and inclusion strategy, supports the level of innovation and collaboration necessary to achieve this goal. The business case for diversity is clear. Numerous studies demonstrate the benefits of a diverse corporate workforce. These include better financial returns, superior stock performance, and importantly, research shows that diverse and inclusive teams support more innovation. Tesla's 2020 DEI report lacks sufficient quantitative and qualitative information for investors to adequately compare the company's performance over time and relative to peers. What the report does reveal is that Tesla's leadership is 83% male and 59% white, despite having what the company describes as a majority-minority workforce, all at a time in which Tesla's customer base is evolving and growing more diverse. Calvert asks that Tesla's reporting include the process the board follows for assessing the effectiveness of the company's DEI programs and the results of that assessment. We also ask that Tesla disclose its full EEO-1 report, a comprehensive breakdown of Tesla's workforce by race and gender according to 10 employment categories, which is already collected and provided to the United States Equal Employment Opportunity Commission every year. In its DEI report, Tesla states, "We do the work required to ensure that our culture is as diverse and inclusive as it is collaborative and driven. However, in order to fully understand whether or not Tesla is executing well on its stated strategy, the company must be more transparent about its policies and practices and do the work to provide investors with reliable, consistent, and comparable data that we need to make informed investment decisions." We acknowledge that Tesla is committed to integrating DEI reporting into the company's annual impact report, but want the board to understand that Tesla's disclosure lags far behind peers. In 2020, Calvert analyzed the top companies held in our core portfolio. At that time, less than 20% were disclosing EEO-1 data, including Tesla. Following our engagement, 70% of these companies have committed to disclosing their full EEO-1 report on an annual basis. As shareholders, we are concerned that Tesla's lack of focus on diversity, equity, and inclusion could hinder the company's ability to innovate in the future. We urge the board to commit to full disclosure rather than incremental, ineffective action. Thank you.
Thank you, Ms. Stokes. The third stockholder proposal is an advisory vote regarding reporting on employee arbitration. Our board has recommended that our stockholders vote against this stockholder proposal. This stockholder proposal is proposed by NIA Impact Capital, whose representative, Christine Hall, is on the line to present the proposal. Dr. Hall, I would like to invite you to speak. You will have 3 minutes.
Thank you. Hello, this is Kristen Hall. Can you hear me? I am Dr. Kristen Hall, founder and CEO at NIA Impact Capital. On behalf of NIA and our co-filers, I formally move Proposal 7. This resolution requests that Tesla's board of directors oversee the preparation of a report on the impact of the use of mandatory arbitration on Tesla employees and on its overall workplace culture. Why is this report needed? After this week's headlines and many other employee allegations of racial discrimination, we as investors need a look under the hood. The use of mandatory arbitration limits employees' remedies when it comes to both harassment and discrimination. Precluding employees from suing in court, often keeping underlying facts, misconduct, and case outcomes secret, these clauses may allow harassment and discrimination to continue, hidden from other employees and from investors. Bias, discrimination, and harassment in the workplace create unknown and uncompensated risks for investors, inviting unnecessary legal, brand, financial, and human capital issues to a company. On the flip side, the benefits of a positive and inclusive company culture with diverse teams include access to top talent, better understanding of consumer preferences, fewer blind spots when it comes to leadership decisions, more informed strategy discussions, and improved risk management. A diverse workforce and the different perspectives it encourages has also been shown to produce more creative and innovative workplace environments. Of particular relevance to Tesla, research shows a strong link between diversity and revenue from innovation, where companies with above average diversity produce significantly greater revenue from innovative products or services than those with below average diversity. Many technologies with which Tesla may compete for recruitment and hiring, such as Adobe, Airbnb, Google, IBM, Intel, Lyft, Microsoft, Salesforce, and Uber, no longer use these policies. Tesla simply cannot rest on its laurels, assuming its first mover advantage will last. Given the allegations raised by over 100 past employees, these racial slurs, discrimination in promotions, a retaliatory culture, and lack of response from human resources, investors are counting on Tesla to step up and make human capital management a priority. Tesla is a known leader in innovation, and it's time now for Tesla to also lead when it comes to promoting a fair and inclusive workplace. Tesla's board is asked again to complete the requested report to determine if mandatory employee arbitration is in the best interest of Tesla, its employees, and its shareholders. Thank you.
Thank you, Dr. Hall. The fourth stockholder proposal is an advisory vote regarding assigning responsibility for strategic oversight of human capital management to an independent board-level committee. Our board has recommended that our stockholders vote against this stockholder proposal. This stockholder proposal is proposed by Comptroller of the City of New York, whose representative Michael Garland is on the line to present the proposal. Mr. Garland, I would like to invite you to speak. You will have 3 minutes.
Great, thank you. Good afternoon, Chair Denholm, board members, and fellow shareholders. The New York City pension funds are long-term Tesla shareholders with roughly 1.3 million shares, representing nearly $1 billion of capital at risk. Our proposal calls on the board to assign responsibility for strategic oversight of human capital management to an independent board committee that will, 1, review corporate policies and practices on principles, strategy, and management of workforce-related matters, including those related to addressing workforce equity and inclusion and compensation for employees other than executive officers. 2, oversee the extent to which Tesla's policy, standards, and requirements are applied consistently across its operations. And 3, offer guidance on strategic decisions that may have an impact on the workforce. Investors are increasingly focused on the essential role that effective human capital management plays in creating long-term shareholder value, and to the material risks created by poor human capital management practices, such as those exhibited by Tesla. That 4 of the 5 shareholder proposals at today's meeting focus on worker and human rights should serve as a wake-up call to the board. Under new SEC disclosure rules, companies are expected to include human capital measures and objectives that the company focuses on in managing the business. Many boards, including at Ford and GM, have signaled greater attention to human capital management by defining explicit oversight responsibilities in committee charters. In opposing Proposal 8, the board claims that independent board committees already perform the requested functions. The board highlights the role of its compensation and audit committees play in overseeing workforce management and workforce issues. However, Neither the Compensation nor the Audit Committee list these responsibilities in their charters or in the proxy statement. According to its charter, the Compensation Committee's responsibilities are limited to compensating executive officers and board members and administering the company's employee benefit plans. Finally, in opposing our proposals, the board also asserts that our supporting statement references one-sided allegations from media headlines lacking context and facts, and that we are drawing speculative conclusions from them. Let me now delineate some facts that underscore the need for the requested board responsibilities. In March of this year, the National Labor Relations Board upheld an earlier ruling that Tesla acted unlawfully when it fired a union activist, interrogated and disciplined workers, issued a new restriction in response to workers exercising their labor law rights, and by threatening workers against unionizing via a tweet from CEO Elon Musk. And just this week, a jury ordered Tesla to pay $137 million to a former worker over racist treatment. Unlike other Tesla employees who allege racial discrimination, the plaintiff was exempt from the company's mandatory arbitration policies that is the subject of proposal.
Welcome back, investors, to Ticker Time News. I'm Adam, and investing in the companies that came out on top of...
The concern is that Tesla's weak labor management practices pose material risks to the company's exponential growth. We expect the independent directors we elect to provide the oversight necessary to protect the long-term interests of the company, its employees, and its shareholders. We urge shareholders to vote for Proposal 8.
Thank you, Mr. Garland.
Thank you.
Thank you. The fifth stockholder proposal is an advisory vote regarding additional reporting on human rights. Our board has recommended that our stockholders vote against this stockholder proposal. The stockholder proposal is proposed by Sisters of the Good Shepherd, New York Province, whose representative, Winifred Dorothy, is on the line to present the proposal. Ms. Dorothy, I would like to invite you to speak. You will have 3 minutes.
Thank you very much, and good afternoon. I am Winifred Doherty, a member of the Sisters of the Good Shepherd, a global international congregation of Catholic sisters and partners in mission. Today, I represent the Sisters of Good Shepherd, New York, as shareholders, and the project participants of Bon Pasteur in the cobalt mines around Kolwezi in the Democratic Republic of Congo. A similar human rights proposal filed by the sisters received nearly 25% investor support last year. And we again urge all Tesla shareholders to support Proposal 9, which requests that the Board of Directors commission an independent third-party report assessing the extent to which Tesla is effectively fulfilling its responsibilities in respect to human rights and engagement in responsible sourcing practices. Today, I challenge the Tesla board and shareholders to apply the same efficacy, efficiency, and high quality standards to the supply chain, from source to factory to showrooms, where Tesla's ingenuity and creativity excel in its latest models, which delight the consumer. 2021 is the International Year for the Eradication of Child Labor. The UN Agenda for Sustainable Development seeks to end child labor in all its forms by 2025. Under the UN Guiding Principles on Business and Human Rights, Tesla has a responsibility to respect human rights within company-owned operations and through their business relationships, including suppliers. Pope Francis in May 2019 urged that mining be at the service of the human person and their inalienable fundamental human rights, not vice versa. Having human rights compliance at the center of your activities, we ask that you acknowledge the harm done to people and planet through your current current organizational model, and recognize that today's world urgently needs social and environmental sustainability, demanding a balance of economic growth and holistic well-being of people and planet. We invite you to join initiatives to advocate for better regulation and a just enforcement of existing laws by all duty bearers. Ensure all supply chains are ethical with zero tolerance of child labour. Implement just working conditions, safety, fair wages and hours for each and every person within the company. Support with funding local initiatives that promote a sustainable and diversified economic development at the upstream of the supply chain. And finally, complete the final rights assessment requested by Proposal 9. Thank you.
Thank you, Ms. Dorothy. Please note that this is the final opportunity to submit any proxies for them to be counted. I declare the polls are now closed. Based on the proxies that we have previously received, I'd like to announce on a preliminary basis that our stockholders have approved the recommendations of the Tesla board on all agenda items except item 2 regarding the reduction of director terms to 2 years, item 5 for an advisory vote regarding the reduction of director terms to 1 year, and item 6 for an advisory vote regarding additional reporting on diversity and inclusion efforts. While over 99% of shares present are entitled to vote on item 2, did so as recommended by the board, unfortunately less than 66.7% of our total outstanding shares, which were required to approve this item, submitted votes for this item. After the final tabulation is completed, we will formally announce the results of the voting by filing a Form 8K within 4 business days of today's meeting. That concludes the official business of today's shareholder meeting, which is now adjourned. Okay. We will now move into company's update presentation by Elon. Please go to the website www.tesla.com/2021 shareholder meeting in order to watch the presentation. During the course of the following session, we may discuss our business outlook and make other forward-looking statements. Such statements are predictions based on our current expectations. Actual events or results could differ materially due to a number of risks and uncertainties, including those disclosed in our most recent Form 10-Q filed with the SEC. Such forward-looking statements represent our view as of today, should not be relied on then after, and as we disclaim any obligation to update them after today. With that, please welcome Elon Musk.